Hello everyone. In our last session till now what we have done is simple interest and compound interest, right? So before doing this particular topic that I've just wrote NUT, let me first redo that topic compound interest in a different terminology. What we do is we invest rupees P at R% for N in years, and the amount that I get is P into 1 plus I to the power N. Do you all agree? So in the initial stage, how much did I invest? In the initial situation, how much did I invest? Rupees P. So P was today's value, also known as present value. That is what I'm investing today. And after 10 years, after 11 years, after 3 years, after 4 years, or after n years, I'll receive an amount. So that will be handed to me in some time in the future. So this amount will be known as future value. This amount will be known as future value. So instead of using the word principal and amount, we can also use the word present value because we are making the investment today, and in return the amount that I'll get at the end of 10 years or 5 years after a certain period of time, that money will come to my hand after a certain number of years in the future. So that amount will be known as future value. So principal can be renamed as present value and amount can be renamed as future value. Yes?
Yes, ma'am.
So now between them we can write the same formula. Future value is present value into 1 plus I to the power n. So you make a single investment of say 1000 rupees, and after 10 years when you are getting an interest of 2%, you are going to withdraw an amount. That amount will be known as the future value. So if I invest, for example, 1200 at 6%, if I am saying 6%, what is my compounding value? What is my compounding value?
1.06.
1.06. If it would have been 7%, what will be my compounding value?
1.0.
8%,
1.0.
11%.
1.1.
Perfect. So now if I get after 1 year, how much will I get? What should I write as a formula? I don't want the calculation right now. I'll multiply 1200 by 1.06 one time. If I withdraw it after the 2 years, I'll get 1200 into 1.06 power 2. So in order to get from present, what is my present value right now?
P 1001.
1200. 1200 is my present value. So from present value, if I want to go to a future value, what am I doing? I'm multiplying the compounding value each time, right? So each time this 1.06 gets multiplied if I want future value. Yes, if I want to move on, if I want to move further, if I want to have a larger value, I'm multiplying this compounding value. Yes. Similarly, if I would have right now said that I have invested something at 8%, what will be my compounding value?
1.08.
And after 1 year, I get 10,000. What I want to find out, what is this 10,000?
Future value.
Future value, because I am receiving this after 1 year. So if this 10,000 is my future value and want to go back and want to find out what is my present value, what will I do? See, normal formula, present value I'll multiply by 1.08 to get 10,000. So then 1.08 comes down. Common sense. In order to move further, in order to increase the value, I'm multiplying 1.08. In order to come back, in order to decrease the value, what will I do? Divide. So divide this by 1.08, we will get present value. Yes. So directly, can I not write future value will be present value will be future value by the compounding value? So if I want to move further, I'll multiply. If I want to come back, I'll divide. Agreed?
Yes, ma'am.
Now, if the same question I would have asked that I'm investing rupees 1,500, 1,500 at, I'm investing rupees 1,500 at 10% for a period of 5 years, how much will I get? How much amount is receivable at the end of 5 years? What am I talking? I am talking about one single investment, that is 1500, and one single withdrawal after a period of 5 years. Agree? I am talking about one single investment once at of rupees 1500, which will be at which will get an interest of 10%, and after a duration of 5 years I am going to get an amount of after 5 years I'll receive a single amount. So I'm only talking about one payment, one investment, one withdrawal. Nothing is repeated. I'm making an investment once of 1500. I'm gonna make some withdrawal at the end of 5 years only once. Yes. So I'm talking about one single investment, one single input, one single output. Yes. Yes.
Yes, ma'am.
That means
Yes.
I'm talking about normal principal amount or present value, future value scenario. Single payment. So what will I get? What will I get? I want to find out future value. What will I get, guys? What should I write?
1500 into 1.1 to the power 5.
1500 into 1.1 to the power 5, and that is,
1464.1.
sorry, 2415.765. Do you all agree?
Yes, ma'am.
So here
Yes,
we were
ma'am.
talking about one single payment. Whether it is input or it is output, it was one payment. So that means, why am I so forcing on one payment? Because now what I'm about to start will be multiple payments. So there comes the word annuity. Now what is annuity? For example, let us discuss the rent of the institute, right? Every single time I have to pay a sum of rupees, say 10,000 right now, let's say, for a sum of rupees 10,000 in the beginning or at the end of the month to my landlord if I want to stay in this property. Agree? Right now in today's structure, the rent is always paid in the beginning of the month, or earlier, before a couple of years, the rent was usually paid at the end of the month. Like you can stay for the entire June period and then you pay in the last 5 days. Nowadays, if I want to stay for the June month, I have to pay in the first 5 days. That's my agreement, right? So what will happen? I am going to pay every month in the beginning. I am going to pay every month 10,000 rupees to my landlord, right? In order to stay for the month. So if, see, in our structure, what happens? The admissions are done in the beginning of the month, in the beginning of the session. So, or you pay it twice, half yearly system, right? We don't have any quarterly or a monthly payment. So, in the month of, say, for example, like April or May, we have one cash flow, huge cash flow, all the fees comes in that time, right? And then for around 5-6 months, there is no inflow. If someone takes in between, that's a secondary case. Otherwise, I don't have it. And then again, I have another inflow after half yearly. For example, if I talk about a normal 11-12 sector, then another inflow comes in the month of September. Agree? So, I have major 2 inflows in these months. So, by the time, see, July, August, there's still a hope that I am again going to get an amount in the September. But when it comes to December, Jan, it's the end of the year. So, usually we are short of the cash. But I can't tell my landlord that right now I don't have the money, I can't pay you, I'll pay you again after I get the fee. After 3-4 months I won't pay, I'll pay it at the end. Will he agree? Will he agree? Definitely not. But even if I say that in the month of September only, take the rent of 6 months, finish it. I'll pay him 60,000, I'll say just keep quiet for 6 months. Right? Because why? Because I've got that inflow. So I'll settle all my expenses at that moment. Agree? So can I do that? No, I can't. The landlord will not allow. Why do we have rental property? So that every month expense comes. I don't have to worry about my monthly expense. I'll never agree. Even if I would have been the owner, I would have never agreed. Why? Because I have it in my head that for my house personal expenses, my monthly expense, I'm going to get a rental income from there. So that the person has to pay me monthly. That's your rent agreement. So that amount can be used for my household expense even though I'm not doing anything else. Right? So I'll never agree. Unless you have a friendly term, that's secondary. In a normal scenario, no one agrees. So every month, I have to pay the same amount, 10,000, to my landlord in the beginning or at the end of the month according to the agreement. Do you agree? I can neither increase the amount, nor can I decrease the amount, nor can I change the duration. All of you agree or not?
Yes.
Similarly, for example, I have taken a loan suppose I take a loan from Devidya. I've taken a loan of rupees 1 lakh, which I imply to return her by paying every quarter 20,000 rupees. So after a 3 month, how much do I need to pay her? 20,000. Again after 3 months, I have to pay her 20,000, and this will continue with an interest amount. Yes or no? So again, why is she doing that? Suppose that's her job profile. That is what she does for her expense in order to get her income. So she will never agree that in between you give it. Why? I will not get the interest amount then. If I'm paying 20,000 after a 3 months, then I'll get an interest for that 3 months. Na? Then again I'm paying an interest for another 3 months so that I get an amount at the end of 6 months. I'll never take it in between, otherwise my interest reduces. If instead of Devida I would have taken it from a bank, the payment structure is already finalized with my account. The account gets linked, right? So after every 3 months, that amount will get deducted. Yes or no? So again, can I change the amount at my will? No, that was finalized at the day of when I took the loan, right? So again, this 20,000 I have to pay after the end of 1 quarter, then again after the end of 1 quarter, then again after the end of 3rd quarter. So that duration is fixed according to the interest rate, and I have to pay the 20,000 amount to the bank after the end of every quarter. So can I change it at my will? No, I can't, because it was finalized in the time of taking the loan itself. So again, this 20,000 is fixed. That end of 3 months is fixed. I can neither change the amount nor can I change the duration. Yes or no? Online, yes or no?
Yes, ma'am.
Yes, ma'am.
Again, suppose I go to the bank and I want to create an FD. For example, I have it in my mind that maybe after say 10 years, I want to buy a rental property only. I want to buy a commercial property, then I'll put it on rent to make sure that I have the rental income through. I don't want to work after that. So what will I do? I'll start saving from today because right now I'm working. So I'll go with a bank that I'm expect that according to the rate of inflation that I can think, that I can imagine. According to that, what can I think of the property cost after a period of 10 years? Say I need 2 crores of rupees. So according to my income structure, what I'll start say monthly. In my case, I'll start half yearly payment because my fees comes in half yearly, right? So I'll start a half yearly payment, right? And I'll say that start a half yearly structure FD for a period of 10 years. You tell me that if I want at the end of 10 years, I want 2 crores of rupees, how much should I start paying you in a half yearly system? You tell me that amount, you include your interest, but after a period of 10 years, I should get a sum of rupees 2 crores. So that will be finalized because I've already finalized my end amount 2 crore. The interest bank is finalized. So they will give me a lump sum amount, say you need to pay 5 lakh, you need to pay 10 lakh, how much amount? And that amount I have to pay after every 6 months. Yes or no? No, in the beginning of the 6 months. If I go to the bank and I tell you open my FD, he'll say pay me the money. I pay him 6 lakh, 5 lakh, 10 lakh, whatever is my first installment, I pay him and then the FD starts. I can't tell him that you start the FD, after 6 months I'll make the payment. Why will he give me the interest amount? On what cost? I haven't paid anything, I haven't submitted anything, right? So he won't pay me the interest. So in order to start anything with the bank other than the loan, I have to make the payment then and there, right now. Only then it starts. Whether it is a recurring deposit account, it's an FD account, you are trunking a sinking fund account, whatever it may be. I have to make the payment now. And then after every 6 months, I'll make that payment again and again. Do you all agree? So again, this amount, if the bank has finalized that, okay, you have to pay 10 lakh, for example, for a period of this much duration. So this 10 lakh can't be reduced or increased according to my way. Suppose my admissions went grade 1 year. So I'll pay 20 lakh, 15 lakh. No. And someday maybe my admission went down. I'll say, no, I'll pay only 7 lakh. None of the scenario will the bank agree. Why? Because the interest amount changed. So the bank has said that if I have to pay say 5 or 10 lakh, whatever that is, I have to pay the same amount every 6 months if I want to have that FD. Yes or no? So in all these structure, I'm talking about multiple payment. I'm making the same payment again and again in a fixed duration of time. Rent 10,000 every month. Say I'm talking about FD 7 lakhs every beginning of the 6 month. I'm talking about LIC premium. I have to pay the same amount in the beginning or the end of the month according to what my instructor said. If I'm talking about loan, I have to make the same payment again and again according to my interest structure to the person from whom I have taken the loan. So in each of these structure, I am making a single payment again and again at a fixed duration of time. So these multiple payment structure where the amount of these multiple payments cannot change, the duration of these multiple payment cannot change is known as annuity. So when we talk about annuity, we are basically talking about equal payment in equal interval of time. Equal payment in equal interval of time. Equal payment in equal interval of time. Now, as you understood, see FD, I have to make the payment now. Loan, I have to make the payment at the end of 1 month, 1 quarter, half yearly, whatever this been decided. So sometimes I make this multiple payment in the beginning, and sometimes I make this multiple payment at the end. And depending on this, we divide our annuity into two categories. This annuity is divided into two categories based on when the payment is made. Based on when the payment is made. One is known as ordinary annuity or annuity regular, and another is known as immediate annuity or annuity due or annuity due. So ordinary annuity or annuity regular is when the payment is made at the end of term. When the payment is made at the end of term. At the end of term. At the end of term. For example, loan. Example, loan. I always suppose I have taken a loan of rupees 1 lakh and I have to pay it in installment of rupees 2000. Will I make the first 2000 payment right now? No. Today I'll enjoy. I have 1 lakh of rupees. I'll get my needs satisfied. Later on, this 2000 will be paid either after 1 month or 1 quarter according to what has been decided. So loan is always made at the end of the term, whatever is the term decided. And immediate annuity is when the payment is made in the beginning of the term. When the payment is made at the beginning of term. So if I am talking about immediate annuity or annuity due, it will always be mentioned. The rupees 2000 is paid now to the bank, to bank A. Now what? Or rupees 2000 is paid in the beginning of a quarter, in the beginning of half yearly, in the beginning of 6 months or beginning of the year. The word now, the word beginning, right away, these words will be there. And for ordinary, either the word end of the term will be written or nothing will be written. So if nothing is mentioned, we take ordinary annuity. This is by default. If nothing is mentioned in the question, we take ordinary annuity. So any bank payment like FD or your RD, all these are immediate annuity because you have to pay first, make the payment, and then only the structure starts. Whether you talk about loan and earlier situations, rent also, those are made at the end of the term. Yes? Online clear till here?
Yes, ma'am.
Yes, sir.
Now, in case of ordinary and immediate, we have both present value, future value, everything. For example, if I say that I have taken a loan of rupees 1 lakh, which I want to return by paying an half yearly installment of 10,000, right? So, which payment is made again and again? 10,000 rupees. I'll pay 10,000 rupees again and again. So, that is known as annuity. I have taken a loan of rupees 1 lakh. When did I take the loan? Today. I have the need today. That's why I have taken the loan of rupees 1 lakh. So 10,000 is the annuity. 1 lakh, since I have taken the loan today, this 1 lakh will be known as, what will be this 1 lakh? Since I have taken the loan today, that will be known as present value. Right? Why do we take the loan? Because today I don't have the money and I need. That's why we take the loan. For any future needs, why will I take the loan? I'll save. So loan is taken for today. Loan is always present value. And in order to repay the loan, I am paying a sum of rupees 10,000 every quarter or every 6 months, again and again. So it will be a sum of, loan will always a sum of present value and annuity. Always. Suppose I have saved a sum of rupees 10,000 every month. So that after a period of 5 years, I get a huge sum of say 7 lakh of rupees. right? So right now I'm making one multiple payment. 10,000 is made every month. So this 10,000 is my annuity. And the 7 lakh, when will I get that 7 lakh?
The future.
Future, so that is future value. So this scenario will be future value and annuity. So in annuity we have two structures, present value annuity question or future value annuity question. So when we read a question, the first thing we have to identify is whether it is a question of annuity or not. How will I know? If I'm making a payment again and again, if there is a multiple payment, if there is only one single input and one single output, one single investment, one single withdrawal, that is normal principal amount or present value, future value question. But if I'm making a payment again and again, there is a multiple payment structure, then that is known as annuity. Then after we have decided that it is an annuity structure, we need to decide whether it is going to be a future value sum or it is a present value sum. If it is loan, loan is always present value. And if something is getting to us in our hand in the later period of time, then that is known as a future value. Clear, guys?
Yes, ma'am.
Yes, ma'am.
Now, this
Yes.
division was based on when I make the payment, when I'm making the annuity payment. Now, according to only this will use in the sum. What I'm about to tell you now is only a theory. We won't use it in the sum. Okay. So again, we have types of annuity based on when the annuity ends. If I know about the ending of the annuity, that we decide with the help of another important division. Again, types of annuity. First is annuity certain. Annuity certain. When I know both, see, starting the always you'll know. Why? I'm started making the payment. Money is getting away from my hand, so I'll know now when it is starting. So a starting period everyone knows. But if I also know when it is going to end, that is annuity certain. Like FD, loan. I already know for how long I need to pay the EMI. So that is annuity certain. When end period is fixed. When end period is fixed. For example, loan, your FD. We already know that I've created the FD for 10 years. So I have to make the payment for 10 years. I know that in my heart. Second is contingent annuity. Contingent annuity. Contingent annuity is the annuity that I have started for a specific purpose. For example, parents started for the marriage or the future studies of the kids. So, for example, if a person would have created an annuity for when my daughter gets married, I want a sum of say 50 lakh or 25 lakh. So, when will that annuity end? When the daughter decides to get married, whether it's the age of 21, 22, 30, whatever age may be. So, the annuity will end at that, right? So, that annuity is known as contingent annuity, which ends at the occurrence of an event. Ends at the occurrence of an event.
Ma'am, is the contingent annuity a specific annuity?
As in,
Like, ma'am, now you told no, ma'am. After
there's
the
a
marriage,
example. For example, even life insurance. When will I pay my life insurance premium? If it's of that structure, as long as I live. Suppose I've created an insurance policy for my life. As long as I live, I make that payment, and whatever is the total amount that I collect till the time of my death, that will get to my next of kin, right? So that will come under contingent annuity. But if I decide that I've started my life insurance policy for a period of 10 years, for 10 years I'll make this premium I'll make this payment to you. So whatever is the amount that I've calculated at that moment, whenever I die, I'll pay me. You give that payment to my family. So it can be any which way. It depends upon the structure.
okay, ma'am.
Third, there are certain payments that goes on and on. For example, in some situations, pension. As long as the person lives, the person will get a pension amount from the government or from the company that the person has worked with. Sometimes the pension is also for a period of 10 years or 7 years till the time you have worked. For more 7 years or 5 years, we'll give you the pension, then we won't give you the pension. So that is known as perpetuity or perpetual annuity, something that goes on forever, like a property tax. If I purchase a property, as long as I'm the owner of that property, I have to pay a tax to the government. So that comes under perpetuity annuity. right? Something that goes on and on, water bill, right? As long water bill I'll always use, so I have to always pay that bill to the government, right? So that comes under perpetuity or perpetual annuity. In this annuity, you will see the word continuing forever. You will see the word continuing forever. You'll see the word continuing forever. Any doubt? Guys,
No, ma'am.
any doubt?
What was the example you gave for contingent annuity?
Even the life insurance in some structure, suppose if I've decided that I'll pay the installment amount as long as I'm living. So I'll continue till as long as I live. Once I die, whatever is the collected accumulated amount that till that duration, that amount will go to my family.
Okay. Thank you.
Any doubt till here?
No, ma'am.
No, ma'am.
Okay. So that's it for today. Revise this theory. We'll do the few sums in our next session.
Thank you, ma'am.